All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and wow, what another crazy day. The S&P finished up 3 point. Is that right? S&P futures. Well, there's a very big difference between S&P futures and SPY because they go out at different times. But I guess if you look at SPY, that was up 2% today. Qs really had the strength today and kind of showed it there at the end of the day, up 2.7%. Emerging markets, EM was up 3.25%. IWM also finished up 1.2%. Transports held their own very nicely, up 1.7%. Sectors, some of the sectors, we kind of saw this around, what time was it? Around 2 o'clock today, where things look like they could have gone either way there for a minute. This was right around, I think it was around 1:30ish, and we got to the point where we tried to break into value a couple times for the day, and of course the first time was at was around, I guess it says 8:45. I must have the hours wrong here on here, but I think it was around 9:45 this morning. We got a very similar bounce to what we got yesterday. Yeah, that should be 9:55. I guess the time is off. Something must have changed on my Thinkorswim. But 9:55, we got this basically the same type of bounce that we had yesterday, a little bit more in magnitude. Same type of call buying, same type of action on the tape. And once we kind of saw the VIX tick back up, we really started to sell off. The VIX really started to sell off. I mean, these are big moves. This is 42 all the way down to 22, and then a move right back 23 all the way up to 46. I mean, that's a roller coaster of a move. That is a huge move in the VIX, and just ginormous. I mean, these moves are usually when you see a move like this in the VIX, usually somebody's majorly is either going out of business or there's something majorly going on with the central banks. Very unusual to see this type of a move, the VIX doubling in an hour on really nothing, just pure momentum in the market. So we're in a little bit of a different environment. Again, if you would have told me years ago that, back, from when I used to trade, through the volatility that we saw in the credit crisis, and if you would have told me, and I traded through those years institutionally, and if you would have told me that, hey, you saw in 2000, all the way in 2018, a double in the VIX in an hour, I would have said, oh, well, who blew up? Or, what did the central banks do? What was the unexpected event? And we just didn't get it. But so it got a little bit dicey there for a while because it was like, oh no, are we going to have a replay of yesterday where we saw the call buying in the morning? And then it was a complete fake out, and we turned the other way and got nailed. So we did not have that. We did come in, but we never really broke the opening print. I did the same thing that I did yesterday in the morning, where yesterday morning I added some positions. I thought it was a good place, and we saw the evidence of the call buying. We saw the VIX sell off in the morning. And then things changed around so quickly, and I got out of all my positions that I added yesterday. I just said, you know what, it's not worth it. Let's see what happens in the overnight markets. And plus, what I really tried to convey in the trading room is that you think a lot clearer when you're not really hooked into all of your positions. So if you kind of not necessarily get out of everything, but just take off excess risk to the level of where you're a little bit more comfortable, you see and you think a lot more clear. And so this morning, we saw a couple attractive trades this morning, and I did jump on them because at this point I figured, with the way that the overnight markets have been moving, we've gotten to a point where things have pretty much gotten flushed out pretty good, and a lot of indicators and a lot of things are looking pretty darn oversold. So we saw a nice Salesforce order this morning. I took that trade. We also saw a really nice ADI order, and some of these things you have to analyze on an individual. It makes sense to analyze all these on an individual basis, and you could see, for example, for ADI, I mean, this was a really nice setup. If you look at the daily chart, all the way, a move all the way in to back to the 200-day moving average. Back when we originally saw analog device call buying, this was all the way back towards the end of November, and that worked really well because I took those trades when we saw the call buying. So it kind of sticks in your mind when they start to buy analog device calls that hey, they were right a couple months ago. Let's see if they're right again. And again, really nice support of the 200-day moving average. So again, knowing where the trade will go wrong is what you want to look for and define support. If analog devices had broken the 200-day moving average, I would not have taken the trade, but it had come back and it looked like it was a nice setup. So, and this was not a huge trade for me. I had put this on in smaller size because, let's face it, the implied volatility was so high this morning that these option prices are expensive. So I actually took some June calls in ADI, and that turned out to be a really nice trade. And then just a few other areas of the market, but just to kind of finish the day's events, we got to the point, again right around I guess 2 o'clock today, and it looked like the VIX might actually turn higher again. So it got a little bit dicey. I had already committed to my positions. I said, hey, I'm not going to unwind my positions like I did yesterday. Because we're at a different state in the market. We've definitely seen enough of a flush out where I think there's decent support. We certainly bounced from the 200-day moving average yesterday and reclaimed some levels. So we had a little bit more confirmation, I think, in the market and a better place to take a stand. So, right or wrong, if the VIX, had snapped up, I think I would have stood my ground and not really made any changes unless I would have seen something really unravel in terms of support at the end of the day. But what we did see at the end of the day was a nice sell-off in the VIX. I've got a short-term trend line drawn in here, and basically once we turn the corner here, it was good night in the VIX, and you started to see basically everything take off very nicely. The Qs were something that I was playing. We played Apple in the room today, which was a great trade. But again, once this time for the third charge that it made towards the value area, and again, these are big moves. They're not 50 basis points move. This is a couple percent move. When you zoom out, you kind of see what you're dealing with here. It's a very high magnitude move. It just looks smaller on the charts when you zoom in. But these were really big moves today. But yeah, so the VIX was a great indicator of noticing which way the market wanted to go. We capitalized it very well. Apple. Once I started to see the VIX not make that turn for higher, I went ahead and grabbed some Apple calls, and this was textbook trading through the value area. We actually put these calls on. I missed the turn here, but I think I put the calls on here, which was fine. This is 159 up to 162 and a half is where I took that trade off. So that was a monster day trade and a really nice setup and big teamwork that we used in the trading room. So that's what it's all about. We're all about helping each other and figuring it out and getting to a place where we're making money. So really nice trades. A couple other trades that I thought were interesting on the day. I'll go through really quickly. They bought some ITB, which I took earlier. I thought ITB has gotten to the point, and I should still have this chart up, where it's seen about $500 million of outflows in a week. So this is sometimes how I use monitoring ETF fund flows. When something like this that extreme, $500 million in this ETF. Now it is home builders which have been very sensitive to interest rates, but I think at this point they're a bit oversold, and you could see a nice bullish engulfing candle that we got today. So I added that position on earlier. I put it on Twitter, as I always mention names that I think are interesting, and I'm very transparent with that. But you got a nice bullish engulfing candle. We'll see. Maybe we get a move up to the 50-day moving average. I think that would end up being a very successful trade for what I put on. And we saw, what kind of got me to look at this was a nice call buyer, a nice aggressive call buyer in ITB. They bought, it wasn't the biggest trade in the world, so $181,000 in option premium, good enough. April 43 calls, and they also sold some puts as well, which I thought was pretty good as well. And then there's a number of other trades that hit. I think U.S. steel calls I think are interesting at this point in time. Another group that has been taken to the woodshed. The metals and mining, I think last week that whole group was down 10% last week. So I think a good place. But there's a number of reversals that you're going to see. I mean, look at this move in Dow DuPont. This off the 200-day moving average. Reclaim of the 200-day moving average went from $67 to $71, a $4 move intraday. So there was plenty of opportunities to make some cash today, and I hope you guys did that as well. I think we managed the situation exceptionally well in the trading room. We respected levels. I took out off some risk a couple days ago, and waited for a little bit of confirmation, and then attacked today. So great job, everybody. Have a great night. See you tomorrow.